The exchange shares of La-Z-Boy up about 17% on pace for their best day since 2017 on stronger than expected earnings and first quarter outlook. And while management did warn of continued macro headwinds, they remain optimistic that impending rate cuts could help turn things around. Joining us now to discuss is Melinda Whittington, CEO at La-Z-Boy. Melinda, great to have you with us.
Thanks for having me.
I thought it was interesting that you outperformed the broader furniture industry by 900 basis points. And part of that, according to you and the management team, is having the physical bricks and mortar stores. How has that helped in terms of, a customer walks in not necessarily intending to purchase, but then sealing that sale?
Sure. We've been around for 97 years, and our foundation is on manufacturing. And to this day, we offer high quality furniture manufactured primarily in North America, and that enables us to do that on a timely basis and offer customization, which is we know the consumer likes to have their choice. As we think about leveraging that historical foundation of manufacturing, we really have expanded, particularly in recent years, on owning our own stores as well. There are about 355 stores in our overall La-Z-Boy Furniture Galleries network, and we own over half of them company-owned. The rest are independently owned. And we're really looking for that terrific brand experience all the way end to end. It gives us data about the consumer so that we can continue to get better, but it also ensures that our comfortable brand experience really goes from product to their shopping experience to everything that they're doing with us. What's been really successful for us in the last couple of years when furniture has been in a bit of a furniture recession is to be able to continue to speak to our consumer about the strength of our brand, remind them of the quality that they can trust, but really bring absolute strong in-store execution to them, give them a comfortable experience when they are in store with the right product and the right messaging to get them in the first place.
How have prices been, Melinda? What has the trend been? And have you seen consumer pushback on that front?
Our consumer is generally an upper middle income consumer. And so it's important that we continue to deliver high quality at a reasonable price. We've had to sharpen some price points for opening price points for consumers that it's aspirational to give them the chance to get into that La-Z-Boy, furniture that they want to be a part of. But overall, pricing has held really well. The industry and history had been a bit reticent to price. Over a pandemic period, prices went up as much as 30-40%. For us, that was about 30%. And a good 2/3 of that has really held, really still on input costs that are lightening, but still a challenge.
Do you think you've seen the worst in terms of input costs? Have we lapped that?
After the last couple of years, I'd never say never, but yes, I would say after some of the absolute industry highs that we've had on so many inputs, it feels like things have moderated a bit.
Right. I'm just curious, from a CEO perspective, it must be sort of a rare occasion. I mean, this hasn't happened since 2017 to see your stock go up by this much. What's sort of your reaction to that stock reaction to the results that you delivered?
Sure. First of all, I'd say our industry overall, it's known that it's been challenged for a while. And a lot of what we've been trying to do is make sure that people understand that we are out executing both in our longer term strategy to drive our own retail and to drive a truly consumer centered experience. And help people understand our business and the expansion on both manufacturing and the retail side of things. So overall, the industry's been challenged, and sometimes we will tend to sort of get caught up in some of that. But it's good to see some of the hard work and just outstanding results of the team get recognized a bit in the marketplace. Again, we do stand out for both our long history, but also the fact that we play in the retail side, which is a real strategic pivot for us, enabled by our strong balance sheet. As you mentioned in a teaser a few moments ago, we've been able to do some retail expansion enabled by our balance sheet. Our goal is not to be in real estate long term, but our goal is to ensure that we can get stores open. We're at 355 today. We want to be at 400, and we know we have the places for those. And we want to continue to increase the ones that we are company owned as well, so that we can ensure our consumers getting an outstanding experience wherever they want to shop. Quite frankly, that may be in store, but it all starts online. Consumers start online with their research. And so we're investing in that messaging and that experience as well, so they get the data they need.
Looking ahead, I mean, in addition to buying back some of those retail store locations that you don't currently own and expanding into more galleries, what do you see as the biggest catalyst? Would it be, if the Fed cuts rates 2 times, 3 times, and you're saying, you know what, we're going to sell a lot more sofas? I mean, what is it?
Yes, that's exactly right. The industry overall is at its best when people are moving homes. And so, historical lows in both new housing starts and then overall turn in the market is definitely holding back our industry and has been for the last couple of years. What we're doing is really doing, the best in the down market to strengthen our company to disproportionately benefit when we do begin to get those tailwinds. And, in the shorter term, you're taking share. But all of the fundamentals are there. There is a pent up desire for folks to move, to get into new homes, a little bit of easing of interest rates, a little bit of a tailwind from housing will make a big difference for the overall industry. And we're positioning ourselves to disproportionately benefit from that.
Melinda, thank you. Melinda Whittington,
thank you.
CEO of La-Z-Boy.